Good morning, traders and investors. Steve Gans here with the weekend update. Now, stay tuned till later in this video, and I'm going to give you a trade concept or a trade idea to trade in paper for educational purposes. So prior to that, I want to start marching through our markets, taking a look at the charts and see what these charts might be trying to tell us here. So the first thing I want to look at, of course, is the SPX, and is just continuing to follow this trend line here right now. It's pulled back to it now, set it here, then it pulled back 1, 2, 3 times and has bounced off of it. And it's trying to get back into this long-term channel that had been there for quite some time. In almost 2 years, that channel was in place. So right now, from my perspective, the SPX, the S&P 500, is trying to get back into that channel. And again, I think this trend line right here is guiding the movement of that right now. So a pullback to that trend line is likely to give another potential bounce off of it. But I also see that the bounces are getting a little less aggressive each time. In other words, those two are starting to converge into what is called a bullish flag pennant. Now, many times that ends up resulting in a breakout to the upside. So I still am neutral to bullish on the market. A couple factors that come into that is I'm seeing that on our green days, our volume was a little bit higher. On Friday, when we had this little bit of a down day here, volume was relatively low, but that was also a Friday going into a 3-day weekend. So volume is going to historically be lower at that point anyway. But the overall trend here is still intact, maybe slowing down a little bit right now. But again, everything I'm pretty much seeing here is bullish in nature. Of course, SPY is going to tell us pretty much the exact same thing as the SPX. Those are the same symbols. SPY is just an ETF version of it. And then the ES is the futures version of it. And again, essentially the exact same story there, that we're converging into a flag pattern. Now, volatility on the S&P 500 did bounce ever so slightly on Friday, but it bounced up in the morning and then it came back down a little bit as we got later in the day. So there's nothing really here. VIX is still low overall, and it's not something that's indicating significant fear in the market yet at this point. On the Qs, of course, we're actually seeing the same general uptrend taking place in the Qs. But what's a little bit interesting here is we did see this higher high in the middle, and we're not, or have not yet, broken that higher high. So this is sometimes what's known as a head and shoulders pattern. And so here we're going to need to see if we do in fact break that trend line. If we do break that trend line, that could likely foreshadow a little bit more of a down move in the Qs. I don't think it'll be a massive down move, but it could certainly come back down here to maybe that support area if that were to break. The other thing that's showing me a little more weakness in the Qs is that our down days have significantly higher volume. That tells me that when we have those down days, a few more people are panicking out of their long-term buy and hold positions in technical stocks. Of course, your NVIDIAs, your Apples, your Palantirs, your Crowds, things along those lines. If we look at volatility for the Qs, kind of the same story here. A little bit of uptick in volatility, but nothing that had sustained as of Friday. But that's something obviously to keep an eye on going forward. Now we'll look at IWM. IWM still is largely the weaker of the 3 main indexes, but it did break through a little bit of a resistance level here this week. So I would expect that we probably will get a little bit of a pullback, maybe to that support line, and then possibly bounce higher off of that support line. With IWM, we're seeing that some of the big days were equally weighted as far as volume. So the up days have had big volume. Some of the down days have had big volume. So there's not a real clear path that's being defined here in IWM at this point. Likewise, if we look at volatility, we can see that volatility is hanging around that all-time low. It's probably, well, it has historically been the weaker of the three. Right now, it seems to have kind of the least amount of fear associated with it. So I think it's less likely to move back down significantly, specifically after that breakout that just took place. Now, I did have a request to also toss gold in here. And the trade I'm going to share is actually surrounding gold. So what we're seeing in gold is a definite, what I'll call pennant or a bull flag pattern. That's where we've had the same tops come into play multiple times. And each time there's a pullback, that pullback gets a little bit shallower. The buyers are coming in earlier and earlier each time until they finally end up breaking through that ceiling that in this case has been existing right around that 317 to 318 range. So the other things that are telling me this might happen, look at our up days. Our up days have had significantly higher volume. So there's two ways that I could play a trade like this. So one way would be wait for a pullback here to this trend line and then go in and do, in my case, I'm looking at a bull call spread, or I could wait for a breakout above this current resistance and at that point put on a bull call spread. So I'm going to show you the spread I'm looking at right here, but I would not put this on personally unless one of those two situations occurred. But what I like about this particular trade is that it is bullish in nature. I am essentially buying, in this case, the 315 call, and then to keep my costs down, I'm selling the 320 call. So in other words, I'm buying this one for $5.50, and then I'm coming back and selling this one at $3.08. So that's giving me my cost of $2.44 or $244 in this trade. If I take this out to expiration, you can see the P&L line here a little bit easier, a little bit cleaner. Now, what I like about this trade is that my max loss, what I paid for the trade, is a little bit less than my max profit. So I have a little higher profit potential in the trade. And my chance of profit is 52%. Now, if you watch the video from last week, though, you'll know that chance of profit is only factoring in the mathematics of how this product or this underlying has moved in the past. It is not factoring, in this case, what I would call the bullish nature of this chart pattern. It's not factoring in the fact that on up days, our volume is significantly higher. It's basically not factoring in my personal bullish read on this particular symbol. So while the P&L diagram shows a chance of profit of 52%, my take is that when I go and I apply my read on this underlying, that it is in a definite bullish mode, I feel that chance of profit is much, much higher than the mathematically shown 52%. Again, once I apply my bullish read on the symbol. So for those reasons, I feel that this is an interesting trade to paper trade. I'm going to go ahead. I'm going to save this trade. I'll put this into my group of the demo paper trades, and then I will share this link in the description below so you can go down and take a look at that. Now, those of you that are interested in what's happening with the alert service and the trades in there, again, I'm largely trading the Flyagonal, but I'm also doing some butterfly trades and other trades in there. These are 3 trades that were closed out this week in the service. So this particular trade was done in SPX. It was open about 6 days. It was just under 8% return. Then this one over here was done in the Qs. Now the Qs, because you have to do so many legs here, I did a 5 lot on this. The commissions ate into this. My P&L was about 10% when I closed this trade. But again, because it takes a lot more legs or a lot more contracts, if you will, I did 5 contracts here, that commissions become a larger factor and they eat into the P&L a little bit more. So that's why that one was definitely lower. And then this final one here that was closed out at 11% in 2 days. I personally had one of these that I opened on Friday morning and I closed Friday afternoon for about a 5% return. Now, in addition to these closed trades, there are 2 open trades that I have open right now. This is me personally. Both of these are up nicely at this stage. And we also opened a brand new one in the alert service on Friday as well. Okay, now let's take a look at the positions that are currently open in the alert service. So in the alert service, this trade was just open going into the close on Friday. The fact that it's down $10 is simply the bid-ask spread on that, nothing more. This trade is a broken wing butterfly that I also trade and share in the alert service. And it's a different type of trade. It's much, much slower moving. It has a very good track record as well. It's just a lot slower trade. In this case, I opened this up at about 31 days to expiration. You can see this one's open 13 days to expiration. And then this last trade is me trading the wheel strategy in PayPal. That's where I'm selling puts, waiting to get assigned PayPal. Once I get assigned PayPal, I'll start selling calls against it. So right now that position's up a couple $100 as well. So those are the 3 current positions open in the alert service. If you want to know more about the alert service, you can join that service for less than a cup of coffee a day. And in each case, when I put on a trade, I'm doing a complete video that's anywhere from about a 3 to 7 minute video that will explain all the details of the trade, how I'm doing it, why I'm doing it. And then if I do adjustments along the way, I share how I'm doing those adjustments also in a video. It's all about teaching people different ways to look at these situations and trading options. Right now, the big flagship here, if you will, has been this Flyagonal since I started trading it live back in May. It's running 93% winners. So it's really held up well in a variety of market conditions. It's got very fast theta decay associated with it. And in general, on average, I'm in that trade about 4 days. None of this is day trading. None of this is requiring a real quick response. When I enter a trade, I float an order out there. It may get filled in 5, 10, 15, 20 minutes. Then I float out my adjustment or my closing orders, which may take hours to days to hit before it closes that trade. So once I post the information, people have time to do whatever they want to do from a modeling standpoint, etc. So if you have any questions, let me know, but I'm going to put the QR code and the URL on the screen if you're interested in the alert service. And otherwise, that wraps things up for this Labor Day weekend. Take care, everyone.